Welcome back to Market on Close. I'm Sam Vardas, live from the floor of the New York Stock Exchange. Shares of Six Flags Entertainment have been under pressure in 2025, falling over 50% on the year. Today, activist investor Land and Buildings issued a letter to shareholders requesting the company to spin off or sell its real estate. It's time now for overlooked stocks, and I'm joined by George Tsilis, a senior markets correspondent, to look at Six Flags. The ticker code FUN doesn't look like it's been that fun for shareholders if you look at the decline year to date, but looking at a bit of a turnaround today. Tell us what we're seeing there, George.
Yeah. You're right, Sam. If you look at the symbol fund, it's not been fun for shareholders. And this is sort of an interesting situation where if you go back, basically a couple of years ago, back in 2023, Six Flags and Cedar Fair basically merged together. And so now it's under a combined unit fund. And they have about 42 parks, most of them in the United States, which include, of course, their theme parks, amusement parks, and water parks, and 38 in the United States. There was a lot of expectations, heightened expectations from the synergies expected from that merger, which really haven't manifested, with the stock really underperforming in the last year, particularly down about 46%. And most of the move to the downside has been pretty much in the last 6 months or so. And so, it begs the questions, as an investor, what's going on with the underlying business? Now, there were some seasonal challenges this year in the amusement park realm because of weather events. Perhaps there was also some reluctance for foreign visitors to visit the United States this year, which actually might have contributed to some of the declines in sales we saw in Six Flags. That also might have been one of the reasons why even competitors like United Parks have not performed very well this year. But there's something else really happening with this Six Flags. It's idiosyncratic to the business. And a couple of things to note is the company's been generating more license agreements with companies like Warner Brothers and DC Comics. They have expectations to expand in Saudi Arabia. And of course, the cost synergies really haven't manifested to the expectations that the post-merger should have had. But now we're starting to see some I guess, upset investors and activist investors, particularly one land and business investment establishment, which is basically a real estate investment firm that investment management firm that invests in real estate. They're really talking about unlocking value in Six Flags by basically spinning off the property assets into a real estate investment trust, to which, of course, Six Flags would lease back the property. And of course, maybe focus more on business operations versus maybe property management. And I can see where they're coming from because one, if you look at the balance sheet of the business, this is where the challenge lies. The company's market capitalization is around $2.1 billion in equity, but they have about $5.5 billion in debt. And if you look at the losses the company as a combined unit with Cedar Fair and Six Flags produced last year, it was around $470 million, and about $340 million of that was just the interest on the debt alone. So by spinning the business off into real estate, the property side of the business, into a real estate investment trust, they would raise cash. That would certainly help mitigate the debt concerns, especially the concerns on EBITDA, which are constrained because of the interest on the debt. So I can see where, Land and Business Investment firm is looking at this. Because if you look at the divergence between Six Flags and their mainstay competitor, for instance, United Parks, there's been a significant divergence over the last 3 months, which tells me that investors are becoming very impatient with Six Flags. And it's not necessarily a industry challenge this year. It really is becoming more of an idiosyncratic stock-specific or company-specific issue.
Yeah, I'm glad you pointed that out. Look, I have not been in the US long enough to have visited a Six Flags park, but from what I'm seeing is that, this activist pressure to sell the real estate has actually been around for a long time. I mean, a few years. It's nothing really new here. But, interesting that you point out that it's sort of idiosyncratic or unique to this business, because when you talk about cyclical downturns or Mother Nature, I mean, that's not affecting other companies like Disney, which continue to pull revenue from theme parks. So I'm just wondering, is this alone enough to turn things around here?
Well, it's a good question. I think at the end of the day, Disney theme parks have done, I would say, rather well. The Disney business itself is improving, and they're going through their own challenges because of their content and networks and so forth. But that's a different story altogether. I do think that there is a possibility, if you look at this breakdown, that this could essentially help Six Flags tremendously because of the constraint of the debt. If it was just essentially one way to increase earnings, as essentially one way to improve earnings over time, but not necessarily to deal with really net income that's negative and particularly long losses on interest on the debt, I think that's going to be more meaningful for shareholders going forward. So it really comes down to the majority shareholder approval and whether or not it'll work out for them, and also the price that they would procure for selling off the assets and the cost that they would have to incur to lease back the assets from another buyer. So these are all factors that need to be considered. But I will say this, if you just look at the consensus estimates by analysts, they're actually quite high. The median target's $31, high target is $43, and the low target is around 23. And the stock right now is trading at below the low target. So to me, that suggests perhaps that the value to be unlocked may be a meaningful catalyst for a major trend reversal. The other thing I noticed too is that this year they're losing 91 cents based on consensus estimates, but next year they're expected to earn a 78-cent profit. So for what it's worth, it seems like at the very least that the analysts who cover the stock expect some transformative shift in the business, and it could be that they spin off the real estate into a REIT.
Okay, so the reaction has been positive from the street and the analysts, the sell side. It needs it. It's up today, so that says something. Thank you so much for that, George. Have a fun weekend.